Hi, everyone. My name is Meghan Andersson, and I'm a tax manager with Singer Lewack's Tax Advisory Group. I'm here to talk to you today about the top 5 things to know about the Paycheck Protection Program, PPP, and the Employee Retention Credit, ERC. First, deductions are now permitted for expenses paid with PPP funds. This is huge for borrowers because although the CARES Act said that PPP forgiveness was excluded from income and therefore not taxable, the IRS said the expenses were not deductible and therefore taxable. Now there's no need to worry because the new bill clarifies that the expenses are deductible, but only for federal income tax purposes. Notably, some states like California still hold that the expenses are not deductible. Second, PPP borrowers can now also claim the Employee Retention Credit against their payroll tax liability for parts of 2020 and 2021. This credit was overlooked last year since most businesses received PPP loans. However, the benefit is worth looking into, especially because any excess credit can result in a refund to the taxpayer. Now, the credit is not automatic. The taxpayer still has to meet one of 2 eligibility tests. If they pass those hurdles, they may qualify, and the benefits are even better for 2021 than they were for 2020. For example, an eligible employer with 50 employees can claim a credit of up to $250,000 for 2020 and an additional credit of up to $700,000 for 2021, but only for excess payroll costs not funded with a PPP loan. Talk to your CPA or tax advisor to see if you qualify for this credit. Third, shifting back to PPP, there's now a second draw loan available for certain harder hit businesses. If you've already applied for and spent your first draw PPP funds, then you can apply for another PPP loan of up to $2 million if you have less than 300 employees and have seen a 25% drop in gross receipts. My next comment has to do with the overlap between PPP and the ERC. The ERC can only be claimed with respect to wages paid if those wages were not paid with PPP funds. So what can we learn from this limitation going forward? Well, now that taxpayers can have both, it might make sense to use PPP funds to pay for more non-payroll costs, so as to maximize the amount of wages available to claim the ERC. As a quick refresher, at least 60% of PPP funds must be spent on payroll costs to receive the popular forgiveness feature. Now, this quickly transitions us into our 4th point. Only 40% of PPP funds can be spent on non-payroll costs. Good news is the recent act expanded this definition to include 4 new categories of non-payroll costs. So now there are more ways to use PPP funds for both first draw and second draw loans. These include certain operations expenditures, such as HR or accounting needs, costs related to property damage due to public disturbances from 2020, certain essential expenditures paid to a supplier under a pre-existing contract, and finally, COVID-19 related costs for keeping the workplace safe, such as personal protective equipment, physical barriers, air filtration systems, and drive-through windows. My 5th and final point has to do with a lesser known rule that makes the PPP loan more available to bigger companies. As you may know, the first draw loan was only available to taxpayers with less than 500 employees. For the second draw loan, the threshold is 300. However, under special SCA rule, a larger employer can still qualify for a PPP loan if its average net income for the preceding 2 years is below $5 million. If a taxpayer did not meet this threshold last year by averaging 2018 and 2019 income, it may meet it this year by averaging 2019 and 2020 income for the second draw loan. That's all for today. For any tax advisory, consulting, or planning needs, please contact any member of our tax advisory group. Our contact information is listed below for your reference. Have a good day.